Welcome to XREX Tea Talk. I'm Fred, and this is our tea chat with any of our XREXers following any of the developments in the crypto markets. I have with me Krish today, my colleague, who is the head of partnerships at XREX, and we are going to talk about this issue that has gripped the headlines this week, which is Three Arrows Capital. Now, before we begin, Krish, can you just share with all of us what is Three Arrows Capital and what kind of company are they?
So on their website, Three Arrows Capital tell themselves or position themselves as a hedge fund founded in 2012 by Suzu and Kyle Davis. They promise to give superior returns compared to other market instruments there are. So this is what they say on their website.
Yeah.
And based on this, they have been investing in the Ethereum ecosystem mainly until 2020, 2021. And then after that, they started investing in Solana, Avalanche, Luna, and also some gamify projects, some other funds, and equity-based companies like Blockify and Durbit and Fireblocks. They also invested in equities in these companies. So more or less, they have been functioning as a hedge fund.
Right.
So this is what they are, and this is what they're supposed to do.
Yeah. And so now let's talk about the problem that they are in right now, right? So what kind of problem are they in right now, and how big is this problem?
So the second question is much easier. This problem is really big and potentially as big as bringing the whole crypto market down with them. So that's how big they are, and why they are in this problem. So just few moments before I said that they are a hedge fund. So as a hedge fund, they take money from others and they invest in projects. So they are supposed to be illiquid, right? Because they are taking money and they're investing. Now, what they did was they not only invested in new companies, but they also said those companies that, hey, you have raised funds, you have USDT or USDC or Solana in your wallet. Why not give it to us? We will give you an 8% returns. So a lot of these companies has given them their capital which they have raised and their treasury to manage.
Yep.
So this is a very direct conflict of what they are doing, because on one hand you are investing money in a company, and on the other hand you're taking their money to earn yield.
Yep.
So this is a very direct conflict, I feel. Similarly, they have also made some bad bets like any other hedge funds,
Right.
but they tried to recoup it in a very
Risky way.
Yeah. And something which is not paying off right now.
Right.
So because of that, they are in this problem. So I'll talk about more why they are in this problem later on. But for now, let's just say they didn't manage their risk properly.
Right. I also know that you're right. Like they placed bets on Luna, and I think
Correct.
that burned a lot of people. But then, on top of it all, we are also seeing news coming out from their run-ins with BlockFi and Voyager Capital earlier this week. $600 million funds that they are not able to pay. So you talk about this impact on the whole crypto market. Like, how is it going to impact like everyone else?
Yeah, sure. So as you just said, like they made a bet on Luna and they lost. So the bet size was $560 million. And right now at this price is a little under $1,000. So 560 million become $1,000. So that's a huge loss for them. So in order to recoup this loss, what they did was they had Ethereum, which they put on Lido, which is a DeFi protocol. They got STETH, which is a liquid token. So generally STETH and ETH is 1:1. But during times such as these, STETH is more illiquid, so it is at a discount that you can sell it, right? Because the one which you put in for ETH, it's in staking, and you can only get it back when ETH 2.0 is online. So now what they did with this is they used the STETH, they went to Aave, they deposited it, and they took a loan of ETH. They again went back to Lido, they deposited it, and they took STETH, went back to Aave, and again did it. So they did it until they had a huge leverage in STETH. And because of the Luna's fall from grace, STETH and ETH started decoupling. So basically it means for every one ETH, you can get maybe 0.96 of the value in STETH when you sell it. So for this reason, they had huge positions. So they have around, $660 million of STETH, and that's also a big exposure. And now they have STETH on Aave, and they don't want it to be liquidated. So for this reason, they have to liquidate some other people's funds to put the money so that they don't get liquidated. But unfortunately, a lot of these platforms where they had their funds, their positions got liquidated. Most probably like Compound, like Durbit. So because of these reasons, they have less and less working capital.
Right.
And they are more in the red because they cannot give in USDT or USDC to increase their margin call limit.
Right.
And this is why it's dangerous, because once you get liquidated, it means you don't have any money to get it back. So the more liquidations happen, the more money they lose, the more riskier it is for them to bounce back. And why it is dangerous for the crypto market? Because the more liquidations happen, the companies that have put their treasury with them, right? So all those startups, all those companies will just vanish because they don't have any money to survive. Although they have raised money, right?
Yep.
But they have kept it with them, and these companies get bankrupt if 3AC gets bankrupt. Now, there are some other companies you just mentioned, like Blockify and Genesis and some others, which actually gave non-collateralized loan to them because they want to earn more APY, right?
Yep. And back then, everyone was bullish about everything.
Everything. And now, 3AC just cannot give them back their capital. So this means when 3AC gets liquidated or when 3AC, goes under insolvency laws, all those companies lose a chunk of their money. So for this reason, you hear Alameda Capital coming and give money or open a credit line to Blockify and to other companies so that they have enough liquidity. So right now, it's a situation where people are not happy with lenders and borrowers and they want to take their money out. Right. So once they start taking their money out, it's like a feedback loop. Everybody wants to get in as fast as possible to take their money out. And this creates a kind of bank run situation. And this is why there's a huge liquidity crunch in all those lenders. Be it Celsius, be it Blockify, be it Genesis, whichever companies are in this business of lending and borrowing are suffering right now.
Now let's talk about the average investors, because a lot of these companies that you spoke about, right, they also have products that are targeted to the average investor like you and I, right? So in times of crisis like this, where their own capital is at risk, what does it mean for an investor who has also funds, like however little it may be with them? What does it mean for me as an average investor?
So as an average investor, we are just looking to beat the inflation. So for us, that's one of the most important things which we think of, and then think of growing the capital that we have. So we put our money in products which might look not risky, but is actually quite risky. So when people say that, hey, you can earn 12% APY, 15% APY, 20% APY on stable coins, you actually think this is a very safe way of doing it because that's a stable coin. But then you don't know what is the counterparty risk. You don't know how these people are using your money to earn these yields, right? So the most important thing that people have to realize right now as 10%, 20%, 15% yields is unsustainable. Somewhere between 5, 6, 7% yield is what is a sustainable way of giving good returns without risking the capital. And as an investor, you should also know what kind of investment vehicle is the company that you're putting your money in is investing in, so that is this something you want to do it or not. So you should do your due diligence very well, like what is their reputation, how they are investing, what's their balance sheet like, how liquid they are, how much capital cash they have in their reserve balance. So all these things should influence you to put it. And the third thing I would say is what most important is, do not put everything in one platform. So always have a basket of platforms where you deposit your money in. Whatever money you want to deposit in, just divide it into 5-6 different parts, and then deposit equally or X amount of money, Y amount of money in different platforms. So this will actually help you, because let's say one of the platforms becomes insolvent and they block the transactions, withdrawals. So you have other 5 platforms where you can take the money out. So you can still lose that 1/6 of your capital, or just wait for it until it becomes liquid. But in the meantime, you can take it out. So you can invest again, so that whatever losses you make, you can recover it back. But if you just put everything in one platform, and if they become insolvent, you actually lose everything that you have. So I think these are the things we should do as an investor when we put money in app or platform which is providing yield products.
Okay, so what do you think will happen next?
I think there's a very high chance that 3AC gets liquidated. So all their positions gets liquidated, and then their lenders come asking them for their money, and if they cannot pay back, then they take the legal route, and this will basically put 3AC into insolvency. So this is a very high possibility, and if this happens, it will affect the crypto market quite badly, because a lot of these leverages that they have taken will have to be closed, and the market will fall. But this is just speculation based on the fact that 3AC might not able to get a loan, or might not able to get some liquidity from other people based on the tokens that they have. Remember, I told you that 3AC has invested in a lot of crypto projects. So they have a lot of these tokens which they cannot sell because they have invested early and it's in the vesting period. But then some people might take a bet on them and give them loans based on these vested tokens, which are locked. So these are companies like Solana, Axie Infinity, Avalanche, ETH, STETH, etc., etc. So this might still happen. So I feel that they are very close to being liquidated than getting loans to cover their positions. But you never know.
And in whatever markets, there are still people and still companies willing to make certain bets, like what you mentioned, right?
It's absolutely no brainer if somebody comes and says, hey, I have X amount of Axie Infinity tokens and give me 10-20% of that as USDT, right? So it's perfectly normal for somebody to take such a risky bet, because these tokens are locked, but once they get released, they will be sold at a premium. So they can take such a risk. So this might happen.
All right, thanks so much, Krish. That's
you.
all the time we have for XREX Tea Time. This is our first episode. If there are any other topics that you would like us to cover, do let us know in the comments, and let us know through social media or anywhere that you can find XREX. As we all know that this is a developing situation. The markets are very volatile right now, and everything can change within a day. And XREX will be there to monitor the situation. And if you would like an updated version of Krish's sharing, do follow us on our social media and join our Discord channels. One word of advice, that anything that we have mentioned in this video is not financial advice. Always do your due diligence. And like I said, market conditions are highly volatile right now. So please stay safe, everyone. Okay, and till the next time, we'll see you then. Bye-bye.
Bye-bye.